Okay, welcome back. You with us here on Midcap Radar. We reported a little earlier, our colleague Yash reported earlier that GIC-RE, the biggest reinsurer in the country, has increased premium it charges to general insurers, and that will have a cascading impact. So general insurance companies are expected to pass that on to consumers like you and me. But GIC-RE and of course insurers will end up making more money because they'll charge more for writing the same policies. Jigar Mistry is co-founder of Buoyant Capital. He runs a PMS and he owns GIC-RE. So full disclosure there. Jigar, thanks very much for joining us. We've spoken about GIC-RE in the past. What do you make of the story? And you know, we have some numbers, but this is all source based in terms of the increase in overall premium that GIC-RE will see because of these increase in rates. Do you think there will be? I mean, these premium increases will be accepted without any opposition? Is there any scope for opposition? Will insurers push back? And if they don't, will they pass it on to consumers?
Good afternoon, Prashant. I think the way to look at this is essentially that you know, the burn cost ratios is something that is handed over to them by the Insurance Information Bureau. And after 2 or 3 years of bad burn cost ratios, GIC would go ahead and revise the premiums. Now, as and when that happens, what the hikes actually looks little larger than normal, because for almost 2 or 3 years when they could have increased the premium, they have not. So this is to be looked from that lens. With regards to GIC-RE, I think the pertinent question that I am asking is, will it lose market share? Because, you know, almost all the global reinsurers are in the market. But given that, you know, their experience, long-standing and almost 60% market share and reach, GIC-RE is among the better placed companies to understand the risk, and it almost becomes like the right of first refusal for them. And a lot of global reinsurers frankly look at them for pricing of the reinsurance risk. So I don't think
Jigar, not by choice, right? They have to. They actually do have the right of first refusal, right? So in a way, they will set the price.
They will, but look at it, Prashant. The minimum business that they should be given is something like 5%, and they have a 60% market share today. So a lot of business actually comes to GIC-RE also because they have a very long-standing business practice, understanding, and experience typical to India. And therefore, you know, the price increases that you were reporting, I think numbers that you reported looked a little high on a one go, because it's sort of pricing for almost 2 to 3 years of bad burn ratios. So another way to look at it is also, if you look at the reported numbers by GIC-RE, they're reporting an underwriting loss of something like 1,500 to 2,000 crores each year. Right now, all the money that they are making is because of restatement and adjustments of their investment income. So the reinsurance business per se is not generating a lot of money for them. This gets readjusted every 2 or 3 years, and that is why, you know, the ROE, which dips to something like 6-7%, then goes up to 12-13%, and on its high to 15-16% on a high. So across cycles, they have been reporting something like 12% ROE when you include both the net worth as well as the investment fair value changes.
Do you think general insurers will pass this on?
I think they would have to, essentially, because if you look at, you know, let's say if I'm going ahead and underwriting a building that I'm sitting in, then I will offer it to all the other reinsurers, right? So I go to, say, a Lombard, and then they move it on to GIC-RE, Swiss Re, and some risk will reside everywhere. But if the burn ratios have been adverse for the last 2 or 3 years, it essentially means that the insurance risk has not been priced correctly. And once that gets reset, the entire cost curve of the industry gets a reset, and that will eventually get passed on by all the players in the supply chain.
Okay. You just for disclosure, you own GIC-RE in your portfolio, right, Jigar?
Yes, so we run it for clients' portfolios, and we have it in the clients' portfolios.
Okay, and of course, when you own it, you're obviously bullish on the business. Jigar, thanks very much. Appreciate your yeah, sorry, go on. Finish that point.
No, I was just making this point that among the reasons for being bullish is besides the point that they have raised the pricing. But if you look at, they are almost sitting on 30,000 crore worth of fair value changes that is not reported. And globally, these reinsurers trade at 1.2 to 1.5 times book. Here you are trading at 0.8 times book, and this is current book. So future book, it is trading below 0.7 times. And the only problem was they are not taking price increase sufficiently in advance. So now with that good cycle coming into place, which stays for hopefully a year, 2 years, then this stock can materially re-rate.
Okay, all right. It's already done well from the lows, and Jigar is hoping that it does even better. Jigar, thanks for joining us and running us through your opinion on the story. We will take a very quick break here. We'll okay, but before we take that break, what we're going to do is sort of get you something that you must take note of. CNBC TV18 in the National Stock Exchange.